Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, today the 1st of December and this is the weekly technical research from the ForexPeaceArmy.com. Usually we talk about the euro currency, and today we will continue to discuss this currency pair and start as usual from the daily time frame. Well, if you remember our discussion during the previous trading sessions, we said that in general when the market stands in some long-term bear trend that we have currently, it usually and if it will fall on some retracement, usually it retraces to the weekly pivot resistance 1. This is the red dash lines. So that happens not every time. Very often the market can just touch the pivot point and continue move to the downside. That has happened during the whole previous move down. But currently you can see that market has closed above the weekly pivot point, okay, and has hit weekly pivot resistance 1 here and this daily confluence resistance. Well, in general, this move to the upside yesterday was due significant, important fundamental event that all major central banks decide to coordinate their activity on the providing of liquidity for the swap market. So that was the very positive sign for all the markets. If you will take a look on the stock market, you'll see that's really nice rally has happened during previous trading session. Well, that is really the support for the euro currency, in general for the other currency markets. Well, and you can see that based on this fundamental event, market has hit our area, even has pierced it very deeply. So market has hit weekly pivot resistance 1 and daily confluence resistance 134.60, 134.67. The major problem with it is that the nature of this move to the upside was not absolutely suitable for the bearish environment. This was the really an explosive move to the upside. That's not very good for the potential downward trend. Well, currently you can see also that unconfirmed trend on the daily time frame now is bullish, since markets stand above this red line. Red line is the MACD predictor indicator. It's a program invented by Jared Napoli. It's almost the same as the simple MACD. Well, when the market stands above this red line, the MACD shows the bullish trend. So although current bar still hasn't been closed yet, so this unconfirmed trend, but if market will close above this red line at the end of current trading session, then the daily trend will turn to the bullish side and we could expect even deeper retracement. Well, we said that logically market should stop here if market really wants to continue move to the downside. So this is very common. When the market retraces just to the weekly pivot resistance 1. When it accelerates further, for instance, as has happened in that area, you can see that market close above the weekly pivot point, move above the weekly pivot resistance 1, accelerates to the weekly pivot resistance 2. It's right here, 136.93. In that case, this could be a sign of the probable reversal or at least short-term changing in the direction of the market. So this could happen here, but currently still we do not have such signs, since market stands just in the area of confluence resistance, okay, but we should be ready for the potential deeper retracement from the point of view of reaching of that target. So if you take a look at that pattern, A, B, C top, 618 retracement, 100%, 132.42. If even market will show the 3.8 retracement from that swing to the downsides to next confluence resistance 136.05, 136.24, that will not be the breaking of the current trend. So this will be just the deep retracement that is logical, since market has hit 100%. When market hits 100% extensions from the any ABCD patterns, usually it could show even 618 retracement. And that will not mean that this trend has been broken, okay, but For the bears, it's more preferable if market, of course, will show shallow retracement and continue move to the downside. So our task here is to watch for the current area and particularly on the intraday charts to catch any potential patterns that could tell us where market may be going. Will continue move to the upside or will reverse to the downside and continue move lower. Well, on the 4-hour time frame, we see that our targets in our area has been hit, but currently we have another ABCD pattern, since our initial ABCD pattern has been erased because market has created new low and erased that our previous former C point that was in that low, since that low is lower than this one. Hence we have only that pattern, A, B, C bottom. Market has accelerated from the 618 right to the 100%, 134.92. Well, as we discussed, if even you have entered short in that area, you will have some room to place your stop to the break-even, since this was and now is still a very strong area of resistance, and you can see market currently is showing in respect to that area, since it consolidates around that area of resistance. Since today, the 1st of December, we have another just important level just above the current market, 135.09. This is the monthly pivot point for the December. Well, based on that explosive move to the upside, we could say that since market has shown this really strong acceleration, it's very probable that it could show some further continuation to the upside just to the previous momentum of that move. Since this momentum now is to the upside is strong, and market just could mechanically continue move to the upside a bit. Well, also you can see that 4-hour time frame is bullish currently, and confirmed daily trend is also bullish. I beg your pardon. Well, on the hourly time frame, what do we see? The 127 extension, I just marked this bit above the market, 135.55. Oh, just one moment, sorry. On the 4-hour time frame, I forgot to say that 1618 extension of that ABCD pattern stands precisely at an area of next confluence resistance. 136.35 is the 1618 extension from that ABCD pattern, okay? And that is next daily confluence resistance, 136.05 by 136.24. That is also almost the daily level of overbought. Well, on the hourly time frame, we see that this initial explosive move to the upside, 127 extension, 135.55. So since market has reached 100%, it could show some retracement. And if you are a scalp trader and intend to enter on the long side of the market, then probably that was your crucial area. This is the hourly confluence support, 133.79, 133.94. And market, if it really intends to continue to move to the upside, should not break that area to the downside, since this is confluence support. This is the 50% support of that explosive bar to the upside. That is also the classical area of support. Its previous was the resistance. Now market has broken it. Now it should be the support. The crucial level for the potential short-term bullish environment is that low, 133 sharp. This is the low of that explosive bar. If market will erase that bar, will break that area to the downside, and will take out that low of that explosive bar to the downside, it will be the pure signal that market is ready to continue move to the downside, and will continue move to the downside based on a medium-term bearish expectation. Because when market erases such explosive bars, that is very common for the bonds market, when some explosive move could appear after some FOMC meeting, and if market will and erases this move during the past 2-3 trading sessions, this is the clear signal that market denied this event and returns back to the previous vision and view on the current market. So that will be our signal for the potential continuation of the bear move. But still, I think that in the short term, market still could continue a bit further, because although we discussed the possibility to enter short and re-establish shorts for the continuation move to the downside, but that was an unpredictable event that has happened with some solid fundamental factor. And although market has reached that area, it has reached it not such as we expected, and not in such a way that is not very welcome and suitable for the entering short currently, because short-term environment now bullish, and I think that market still continue move a bit further. So the next target that could be reached is that area of confidence resistance. For the today trading session, this could be also the potential target 135.50 areas, 127 extension of that move. That is the first crucial level to watch for if market will hold there and show some bullish signs on the 5-minute chart, on the 15-minute chart here. Then probably, if you're a scalp trader, you could try to enter on the long side of the market. If market will continue move further and take out that low, then it will mean that market is ready to continue move to the downside, and that market is denied and negate this positive event for the market, this explosive move to the upside, and it's ready to continue move to now a medium term bearish target.